Hello and welcome to Livewire's Buy, Hold, Sell. My name is Chris Conway. Whilst moving fast and breaking things might grab the market's attention for a minute, it ultimately means nothing if companies can't transition from potential to profitability. So today in this episode, we're going to look at companies at or near that inflection point, as well as the couple that might prove to be more hype than substance. To help me do that, I'm joined by Martin Hickson from 1851 Capital and Steve Johnson from Forager. First up, we're going to run the ruler over a handful of stocks that are at or near that inflection point of profitability. We'll start with SKS Technologies. And Steve, I might come to you first. Buy, hold or sell?
Yeah, well, that inflection point was a couple of years ago for this business. It's nicely profitable today and growing very, very quickly on the back of data center rollouts here in Australia. I'm a bit worried that there's a lot of hype behind that sector. There's a lot of capital going into it that I think people are going to be disappointed with the returns that they earn on that capital. So I'm worried about how much of this is cycle versus actual business execution and innovation. And for that reason, I'll say hold on the stock.
Martin, it's up over 140% over the past year. So it's had a ripping run. Buy, hold or sell for you?
I think it's still a buy. I mean, over the last 18 months, the share price has gone from 40 cents to $3. So it's been a cracker for those that have held it. They operate in the data center space. Over 70% of their order book now comes from data centers. And that's up from 4 years ago. So they're early on that trend. They've built a very, very strong business on the back of data center work. At the moment, the company has an order book of $200 million, a tender pipeline of $500 million. So there's still a lot more work in that data space that's flowing through to them. It trades on a P of 16 times, so it's profitable. Earnings are growing at 30% plus. So we still think there is significant upside for SKS as this data center thematic continues to play out over the next few years.
Next up, we're going to talk about Baby Bunting, all things nappies and strollers. Martin, I'll stay with you. Buy, hold or sell?
Yeah, we think Baby Bunting's also a buy. So Mark Tepperson, the new CEO, relatively new, he's been in the role for 2 years now. He's doing some really great things. So the recent result, he gave an update around these new refurbished stores that the company had opened. So they'd refurbed 3 stores already. They're doing a further 10 to 12 this financial year. And the 3 that he's refurbed, they've seen revenue increase by over 25% in those particular stores. So very, very strong post-refurb. They're also rolling out smaller format stores. He's increasing exclusive brands, increasing private label products. So that's really seen an acceleration of the share price. It's up 50% on the back of the result, but we think it can go further. We think Baby Bunting's a buy.
Yeah, it pretty much one reporting season. I think it was up 40% on the day and up 80% over the past year. Steve, is this one too hot? Buy, hold or sell for you?
Bit hot for me, yes, and I think that's been a bit of the reporting season we had. This is true in our portfolio as well. People are willing to buy a promise and a story now, whereas that wasn't the case 12 months ago. That doesn't mean it's wrong. I just think there's a lot more optimism in some of these things now. And this business has been a cyclical, pretty difficult business over a long period of time. And I would like to see more evidence there that it's turning up in the numbers across the whole business rather than a period here of outperformance.
Yeah. Next up, we're going to talk about EML payments. 80 billion in transactions annually. Steve, I'll stay with you. That's a lot of transactions. Buy, hold or sell?
Talk about a business with a littered history of things going wrong over time. This business has had its problems. We own the stock. I'm pretty optimistic about where it's going. So it's a buy for me. And I think you're going to see a pretty substantial change in profitability of this company over the next few years. It's a new management team in there. They have said they can hold the cost base flat with where it is at the moment while they add tens of millions of dollars to the revenue line. I think if you can do that, you're going to see a dramatically more profitable business than you're seeing today. And again, I think for good reason, a story that people are not yet buying, but one that I do think they can deliver on.
Right. Up 40% over the last year. Martin, buy, hold or sell for you on EML?
Yeah, I think EML's a hold at the moment. As Steve mentioned, they've got a new management team. We think they're doing all the right things. They're adding to the sales team. They're focusing on their tech platform. So we think that FY26 is more of a reset year. We think that investors have got time with this particular company. We're watching it very closely, but at the moment we think it's a hold.
Ladies and gentlemen, my favourite part of buy, hold, sell. I've asked the gents to bring along a couple of stocks, but this time it's where valuations might have departed from reality. So we might get a little bit spicy here, but not too spicy. Martin, I'm going to stay with you. What's one that you think is a little bit overcooked?
One that's up 10 times over the last 2 months is a company called 40X. That particular company operates in the imaging space. They had an investment from Pro Medicus more recently, and that's what's really driven the share price over the last 2 months. But at the moment, it's got a $1 billion market cap. In FY25, it made $6 million in revenue, it burnt through 35 million cash. There's only 6 million cash remaining. So we think it's in a pretty precarious position. I think the company needs to raise money. So at the moment, I think it's a sell.
Steve, what about you? One that might be a little bit more hot air than substance?
Well, my company also has a market cap of more than $1 billion, and it has $6 million less revenue than Martin. So we're talking about zero. And there are a surprising number of companies on the ASX at the moment that have $1 billion market caps, and at the moment are nothing but stories. This one is a good story. I'm talking Hyperion X. They are talking about recycling titanium, doing it at a much lower price than the rest of the industry operates at the moment. And there are a lot of end markets, a lot of US government support for onshoring. They are set up in the US to produce. I just think there's a long way to go before this company is going to justify a $1.4 billion market capitalization. And I know with these manufacturing type businesses that things do go wrong. It always takes longer. It has already taken longer with this company. And there's just one more thing I think people should be really careful of with these types of businesses. The promotional announcements are coming thick and fast. And every time you see the share price go down a bit, there's another announcement that comes out. And when we had a listed investment company on the market, you can sit there and type out an ASX announcement and you send it across to the ASX and it goes up on the platform, and people just need to recognise that it's pretty easy to write these announcements to the ASX and it's pretty hard to generate revenue and put it in the bank, and you need to distinguish between those different types of things when assessing some of these more speculative companies.
Ladies and gentlemen, that's all we have time for. If you enjoyed this episode of Buy, Hold, Sell, make sure to give it a like. I'd like to thank Steve Johnson and Martin Hickson for the entire series. And don't forget to follow our YouTube channel. We're adding lots of great content every single week.